Everyone, welcome back to the Big Guy Trades channel. We're going to do our daily review. We'll look over the bars for today, and then we'll also talk about what's next for the market. Looking at this chart, you can see there's a few new things on here. This is something new I've been working on, and I'll release more about that soon. But for now, you can ignore these little markers on the chart. Starting off the day, we had 4 bull bars initially. It looked pretty good for the bulls. We had this big gap up, we had 4 bull bars, and then the market just collapsed after that. Now this is at a critical point on the daily chart. I'll check out the daily chart later, but basically this was at kind of the all-time highs right around this 65.40 level. So to me, we tried to break above that and then we couldn't. So this was just an initial failure to break above that. One issue that might have not necessarily led to a big sell-off like this, but led to where bulls might start to take profits, is that we were getting this big gap up late in the trend. So we like gaps, we like strong bull bars, but when you look at what happened yesterday and going into the day before, we've really been in a pretty strong bull trend for more than a day up to this point. And so then you're in this fairly tight bull channel through here, and then you're getting this biggest move, right? A few bars here, then a gap and a few more bars. You're getting this late in this bull trend that we've already had, and that's going to attract profit takers. So that's an argument to perhaps either try to find a short or to just not get long. But there is still a bullish case. And that is that as long as the market's still trending, that trend can last a lot longer than you would think. So yes, we are getting this sign that it might start to attract profit takers, but that does not mean that there's not a reasonable bullish trade to take. So when I'm looking at this third bull bar here, so what have we had at that point? We've had 2 bull bars, and then now we're getting this third one, and it's closing above its midpoint. It's not too large, so it's not just so much larger than the other bars that it makes it like a weird trade. It's just a normal size bar. So we've been in a bull trend. We're getting consecutive bull bars. We're getting one reasonable, like a decent sized bull bar, right around 5 points tall. So to me, that's reasonable for a swing trade. Trying to buy here. Some would try to go for 2 times their risk. Others would continue to try to hold on and bet that we'll get a big bull trend day, and then we'll get maybe up to 6,600 today. And that's not a bad bet. When we've been in a bull trend, we're getting consecutive bull bars like this, then that's a reasonable trade to try to take. It's hard to go wrong if you're identifying the trend and then you're taking trades in the direction of that trend. Now, that being said, you are going to have some losers, and this was one of those cases where you're going to have a loser. So if you're going to lose, do you want to lose big, and risk something like this, or do you want to lose small? I'd rather lose small. I'd rather put my stop right below that bar, and either I get my 2 times my risk or more, or I get stopped out below that bar and I continue about my day. I don't want to buy here and then try to basically hold all through this. I would rather take relatively small losses and live to trade another day. It's been especially early in the day when you're taking these, when you're trying to take a swing trade or any kind of trade early in the day. You don't want your losses to grow too large because that doesn't set you up very well for the rest of the day. You don't want to come in and by 10 o'clock, 10:15, you're down 10, 20 points. That's no way to start off the day. So reasonable buy here. And then if I'm taking it, I'm putting my stop below there. So your fourth bar, it's an outside bull bar. It goes below and above that previous bar 3. And then your 5th bar is this big bear bar. So at this point, it's going below all of these bull bars. There's something wrong now with the bull case, at least for the next few bars. Now we still could get some sort of double bottom and get a swing trade up. But once you see this big bear bar engulfing all the prior bars, there's something wrong with that bull case. But what the market is looking for, once you get this fourth bar overlapping the third bar, and then this fifth bar mostly overlapping this fourth bar, it's creating a breakout pattern. Both sides are trying to take bets that they're going to win. Like we were wanting to buy here, trying to get a swing trade up. And then when you start to see the market trying to test down and then test back up, and it's doing this several times, that is the market trying to get an early swing trade. It's trying to find its direction for the day. So at the close of this bear bar, do I want to try to be selling below this and selling against the trend, selling into the moving average? I'd rather not. You know, in hindsight, we can see selling here would have been the best trade of the day. I'd rather not be selling into all the support we have right here, the close of yesterday, moving average, the bull trend. But when you're looking at those first 5 bars, you can kind of start to, once you study this stuff, you start to get an eye for this breakout mode. The market is looking for a direction to break out. It's probing up and it's probing down, up then down, and it's trying both directions until it gets one direction right. So although I wouldn't sell there, but that's the idea. That's what the market is trying to find its direction, and then the bear is one on that case. I will mark a short here. We have a first bear bar, a second bear bar, a third bear bar, a fourth bear bar. Now, all of these bars are really staying above the moving average. They have tails near the bottom of them. The bears aren't all that strong. They're able to control the time and the price here. They're able to move the market down, but it's still above the moving average. You know, it hasn't quite turned over yet. But at this point, then you get a close below the moving average, and then another close on its low. Then once again, that's changing something. So we're now below the close of yesterday. We're below the moving average. It's looking now like it's more like a failed breakout above yesterday's high. We have the high gapped up, tried to go up a couple times, couldn't. And now, I mean, all the bulls that were buying here, they're clearly starting to get out below either of these bars here. And I always love to do this is you can, you know, what is your proof that that's what's happening? Well, then look at this next bar. This is the biggest bear bar on the chart up to that point. And that means that the bulls are selling. They're rushing to get out. They can tell, you know, maybe they held below this bar or this bar. But then once you get this, it's clearly a failed breakout and the bulls are rushing to get out. And then you see this big bear bar. So that's where the bulls are rushing to get out of their trade. Now, during this, sometimes I don't like to sell below a big bear bar like this. You know, in this context on the open, what you can do is go to a lower time frame and try to find a swing trade on a lower time, like a 1 minute chart or a tick chart. And you know, you're below the moving average and you see this forming, and maybe you can try to risk 3 points or 5 points instead of risking the whole 10 points or 12 points. So once you've identified there's a chance we might have a big move down here, then you know, trade your 5 minute chart like this, or go down to a lower time frame and try to find a swing trade there. So in theory, I could mark all of these shorts, and you know, in theory, you should just be continuing to short until the market goes until it stops going down. But you know, if you're selling here, I would try to, well, really, you could short anywhere through here, but realistically, you know, you're just going to take one trade. So if I'm selling here and this bar is large, so I would try to at least match the size of the bar. So I'm okay with scalping here or swing trading. So if I'm scalping, normally I go for 5 points, but since this bar is about 12 points tall, if I'm going to take this, then I want to convert that into like a 12-point scalp. So I'd want to be getting out somewhere right around down here. So basically, you're risking 12 points to make 12 points. And the context tells you your probability. Your probability is higher than 50% chance that you'll get down here first. When you're reading this, you can see bulls are likely to give up here. That pushes my odds above 50%. So, say this is a 60% trade, you're risking one to make one, then that's actually a great trade. That's really the math there is really strong. So selling below that bar, and really any of these, if you're scalping, I think once again try to be getting at least at least the size of your risk. So I think the probability is pretty high, but then also with this being a more major trap, we might have a larger move. So not only is the probability good for a scalp, but I think it's good for a swing as well. We have a larger failed breakout happening here. So if we're going down, we're probably going to go down for more than just a little bit. So there's your 2 times your risk, and you're getting out just a couple bars later. It's a great short. So this is one of those nice bars where I think a scalp and a swing trade both make sense. Market continues down. You get 5, 6, 7, 8, 9, 10, 11, 12 bear bars in a row. Any first pullback is very likely to get sold again. So here's a first pullback. First time going above a bear bar since, the first time this day actually we went above a bear bar. Also at the 200 moving average, high probability there'll be sellers here for at least a scalp. So limit orders are going in here. First bull bar, high probability that bull bar is going to be sold as well. And what do we get? We get our basically one more push down, and then the market heads the other way. So after all this selling, you're really high probability you're going to get a little bit more down. And then, so that's how they trade it. They're either selling below these bars or selling these closes all the way down. They hold through the first pullback and then they exit on that last leg. Or they'll sell above the bear bar, or they're selling the close of that first bull bar. And, if someone's wanting to continue to short, I still think this bear bar here, I still think that's okay to sell. The problem is you're getting pretty far from the moving average, which I think hurts your case. So if I was to start selling later in a trend like this, then I probably want to trade a little bit smaller because I don't think it's quite as strong of a trade. But when you're looking at this, we haven't really capitulated. I mean, the market hasn't gone too far yet. Kind of like with this bull trend we were looking at here. Essentially, the market went too far here, and then it pulled back. But at this point, we never really had a kind of like a curve that turned down and went way too far, way too quick. So I would not be against selling here. If anything, it looked like a first entry long, second entry long that fails. And so once again, you can try to be swing trading below here. I wouldn't want to scalp. I don't think the odds are high enough considering we're that far from the moving average. But for a swing trade, I think that's okay. Market pulls back. Do I want to be selling these now? Probably not, because the sell the close of the bull bar, that trade was over here. That trade's already happened. So I'm probably done with trying to sell into these pullbacks now. I'd rather be looking to sell closer to the moving average. And we get that over here. So the way I would look at this short here is we have a market was moving up and it pulled back. Then when I try to break it above that level again and the moving average, it couldn't. And now we're below it, close below the moving average. Good chance the market will continue trying to sell off here. So this is another reasonable swing trade attempt. Market pulls back, tries to get above the moving average, does not have a strong enough case to try to get long here. Then once it pulls back down again, you get this nice close there, then a follow through bar. Then this also would be something to try to be selling short. Now, especially if you think back to how were the markets during the tariffs in March and April. We had a lot of days that would start like this, and then in the middle of the day, we would kind of go sideways like here, and then the market would turn over basically. We'd double top here, and then the day would continue to sell off. Now, we haven't been getting as much of that because we are in a more bullish market. But when you're selling here, then that's what you're trying to get. You're trying to get a swing trade down for that basically continuation into the end of the day of selling. So when you look at this and we've basically started to go sideways, then you're going to have some disappointing trades. So I mean, at this point, you've tried to sell here, you've tried to sell here, and you've tried to sell here, and then they're all losers. You've had 3 losers in a row. But you just need to keep in mind, some days do turn over like that, especially if you're in a more bearish market. And we've not been in a very bearish market, but I still think these are okay to try to be selling, because remember, we had this failed break above the all-time high over here. So we failed to break above it. Market's pulling back. We might have a continued pull back down. So even though the daily chart isn't in this big bear market, we still have reason to think that the market might have another move lower with this fairly major failed breakout there. So yes, you would have had 3 of these losing trades in a row. Well, one, that's just part of swing trading. Your reward is more than your risk, so that means your probability is going to be lower. So losing 3 trades in a row is that's very common, in fact. And another thing is, this is priced into your overall strategy. If you're taking trades, there's going to be some days that don't continue like this, and you just end up with losers. But then some days do continue down, and then you end up with many swing trades that just win over and over and over again. And so you have to take these losers along with the winners, and just keep in mind what your overall strategy is. It's not just the trades for that day. Say, oh, I had 3 losers. Well, think about for the year. If you're continuing to take the right trades in the right spots, you have the right ideas behind the trades, then some days are going to be bad, some days are going to be really good, and on average, it will average out in the end. Probably at this point, once you see that bear bar fail and you get a bull bar, then at that point, then you can really look at this market and say, what have we done the last few bars? We're going sideways now. Yes, we had a double top here, and it was reasonable to try to get short again here. But now after this bull bar, we're just hanging around the moving average. So something is different now. The market's been given plenty of times to go lower, and is not. And we can see, every bear attempt to go lower gets bought. Every bull attempt to go higher gets sold. So once you start to get into that sideways movement, take your hands off, go do something else for 30 minutes or an hour. And then once you start to see the market after a breakout has occurred, then you get back in and try to be trading again. So don't sit here and try to continue to sell here, and then sell here, and then buy here, and then try to sell here again, when all the market's doing, at this point we've identified the market is now sideways and something's wrong. So don't continue to try to sell all through here or buy and just keep on racking up those bad trades. That's where your numbers really get off. Your numbers don't get bad by taking these trades. Your numbers get bad by continuing to take them after the market's been going sideways. These are the signs of a trading range. It's bad follow through. It's sticking around the moving average. And at the point in the day I'm talking now, it's 3:20, and the market is actually still trying to get out of this range. There's different levels we can draw here. We have the lows of the range. We failed to break below them here, so good chance of trying to go to the top of the range to test the top. We have the top of the range here, and we haven't actually broken out of the top of that range yet. It looks like it might have a chance at breaking out here and ending up as not such a bearish day, but effectively we have not broken out of the range yet, so we're still in that. So once you start to see the market go sideways, I would definitely go ahead and just take your hands off the controls and go do something for an hour, let it break out, and then that's when you come back and try to trade again. So let's look at the daily chart, see where we're at in the market. So this is my I have the micro up here, and this is the micro I've been holding. I've been holding it since somewhere over here in I think July. I added that on, and I think it's a good thing to just hold like a micro position. There's always a bullish bias in the market. If you look out 5 years from now, 10 years from now, especially 10 years, it's almost certain the market will be higher than what it is now. And by holding, just like one micro, it is, you're just taking advantage of that continuous, that slow march up that the market has. So I've been holding that for July. I'm going to continue to hold it. I'd like to get out around 7,000. Now this contract ends in a couple weeks, 3 weeks actually. So it won't get up there by then. So I'll have to, close the trade with the profit and then decide if I want to re-enter. But ideally, that's what it would be. I'd be any kind of long position. I'd be trying to get out around that 7,000. So I think the daily chart is still looking nice and bullish. Here's our big tariff move down. Market rebounding pretty strongly. It looks a lot like COVID. And if you go back and review the COVID chart, so I zoom back. So the COVID bottom is here. This is March of 2020, and then this is the rally that followed. So we're in September, so we'd be somewhere around here. And we continued to have this really strong, steady bull trend for a long time very long time after COVID ended. So then if we look at our market today, right, effectively this would be like the tariff / COVID crash. And then this would be like the post-tariff or post-COVID rally. And so if we're assuming they're going to act the same, then this has a lot longer way to run up. So just looking at the technicals and looking at past examples, I think this is very bullish. Any close below the moving average has been bought. We've really had no signs of this channel slowing yet. And on the macro side of it, without getting into the politics, I think the markets are well supported. I think the companies are able to do a lot right now. I think there's a lot of growth. There's a lot of exciting fields that are benefiting from AI. And it just seems like there's a lot of runway for this market to continue up. Another thing on the technicals, we're now clearly above the previous highs over here. And now we've clearly tried to get below it several times, and we haven't been able to. So yes, I'm remaining bullish. Even if we get some deep pullbacks here, I'm still going to remain bullish. I think we have more up. I think we want to get to 7,000. How soon? I don't know. I think within 6 months we get to 7,000. I don't even. It could happen even quicker than that. But I think within 6 months. If I had to guess, where's the market going to be in 6 months? I would say I'd put it at 7,000. So that's a pretty healthy move up. So what about today's bar? Because I talked a lot about that, how that was a failed breakout. So it's failing to break out above this level. And so that's true. That's the case. Now, the bearishness of the day is weakening. It's starting to get this tail on the bottom. It was looking worse earlier, and now we're basically back to the midpoint of the bar. So about this being a failed breakout, well, what about this being a failed breakout? This high here. What about this? The market broke above it and then pulled back, and then we ended up higher. Or what about these levels here? All right, we had this high. Then the market failed to break above there, failed again. And then a few weeks later, we end up way up here. Or what about, down here? So it's been the same story the whole way. These what looks like it's going to be a failed breakout of it ends up as not being that. So until the market really has a shock and begins to do something differently, then have to remain bullish. And if you look back at any days that closed below the moving average, like a bear bar here, or a bear bar here, or a bear bar here, buying those have been very profitable if someone wants to do that. So, keep that in mind for the near future. But also, I don't know, 10 years from now, if you're in some kind of similar market and you see a bear close below the moving average, that could be a very good trade. Buying these bear closes following a deep sell-off like this. Market got oversold, market's recovering, and then buying these little pullbacks have done quite well. And I'm sure that markets in the future will continue to have movements like this. So when those situations come up, well, that could be a very good opportunity. So before we go, once again, I do have a big announcement coming up soon. It's related to this back testing information you see here. So it's an automated strategy that I've developed, and it's really two parts. So it has a back testing indicator, so you can find the best parameters that you'd be interested in. And then the second part is the strategy itself, and it can take automated trades. And it works pretty well. It's actually quite good. So I'm excited to be talking more about that soon. So thank you guys for watching, and I will see you back again soon.